Hello everyone, it's Jefford again from Rubik's Academy. Today we're going to talk about this very important indicator that is called RSI. Okay, we are still on the technical part of the so-called this beginners series, so stick with me. We have to go through the entire technical aspect before we proceed to the fundamental aspect, which is actually going to be a lot longer than the technical aspect because there are a lot more things to talk about for the fundamental side. Now for the technical side, today we're going through this thing called the RSI, okay, known as the relative strength index. Okay, basically what this particular index does is that it measures overbought / oversold conditions. Okay, this is basically the gist of this particular index. It measures overbought / oversold conditions. Okay, I'm not going to go into the math, you know, how it is calculated, how it is derived, why is the period 14, what is it 70-30. Again, this series is not meant to actually go in depth on how these indexes work, right? And honestly, the realm of how these indexes work belongs to the realm of mathematicians or statisticians. Okay, we are traders, we are investors. This is not something that we need to know. It is good to know. It is not on a need to know basis. That's the difference. Okay, so without further ado, let's go to the charts. Okay, so this USD yen right here. Again, what do? Go to this, okay, and then look, I already favorited relative strength index. If you want, you can also search here. All right, click on that and that's it. Just click once, it's gonna come out. All right, I know clicking on it doesn't seem to do anything, but it does something. So click once and it will come out. If you click multiple times, there will be multiple indexes being shown. Okay, you don't need that. Okay, you just need one index. Okay, some people, they like multiple indexes to do certain comparisons or whatsoever, but for the purposes of this demonstration, you only need one. Okay, so let me just make it really big. All right, now first of all, you can see that the indexes correspond to the movement of the candles. All right, when the candles come down, the indexes come down. When the candles go up, the index also goes up. All right, so it follows closely and in a proportionate direct manner to the direction of movement of the candlesticks. Please note that this might not be the case for every single index, so we need to remember that. Okay, we need to remember that. All right, now what are the usual levels that people look at? As you can see, they already drew for you, right? The first dotted line is 70 over here. The second dotted line is 30 over here. Once the index dips below 30, it indicates oversold. All right, meaning that the asset is currently oversold by the standards of this index. Okay, if it goes above 70, like for example, let me just find a, okay, like for example, this case, okay, if it goes above 70, let me just make it a bit clearer, right over here. Okay, if it goes over 70, all right, it means that it's overbought. Okay, the particular asset is overbought. In this case, since it's USD yen, it means the USD against the yen is overbought. If it's a stock, means the stock is overbought. If it's a commodity, means the commodity is overbought. Simple. Okay, now again, this is not a holy grail. All right, because you can see that, for example, if I were to look at this, okay, and I drag the chart down, if you were to try and go short, because whenever it goes into the overbought zone, you're supposed to short the asset. Whenever it goes into the oversold zone, you're supposed to long the asset. If I tried to short it around here when it entered the zone, I would have suffered a huge loss before I made some money. Okay, similarly, okay, if I were to look at for example, okay, for example here, okay, If I try to do a long, alright, if I try to do a long around here when it dipped down into the oversold zone, alright, if I try to do a long here, okay, now look, if you look at the corresponding candlesticks, I would actually have suffered a loss in the long run because it just kept going down, right? It just kept going down, and now I'm still in a loss position after holding onto the position for so long. Okay, so by no means is this a holy grail. This is not a holy grail. Let me just change the color. Change it to maybe this color. Okay. Alright, by no means this is a holy grail. It is definitely not a holy grail. It is not meant to be a holy grail. Alright, you should not be looking at this alone and trading on this alone. This should be one of many sort of indicators, one of many criteria that your strategy has. Alright, it should only be used as a complementary indicator. Okay, it is not meant to be a holy grail. You should not enter just based on this. You will lose in the long term. But it is good to look at this because traders all over the world look at this. It should help you in your technical analysis. Alright, so that's it for this episode. Thank you very much. Very short, very easy to understand. If you want to know exactly how RSI works, you can either subscribe to the complete foundation course in the link below, or you can just do some research. Okay, I'm not sure whether you will understand it, but you may not. But if you want to have a surefire way of understanding what exactly the RSI does, you can refer to the link below. All right, in the actual course, I go very in-depth into how the RSI works. All right, thank you very much. My name is Jeffet from Rubik's Academy. Thank you.